Good afternoon, everyone. Welcome to the inaugural session of the Advisors Table. My name is Andrea Suarez Paris, and I'm an employment attorney in Orange County, California. So, one of the intentions in creating this series is I wanted to create an intimate environment and bring professionals who are exceptional at what they do to share their expertise. And I choose experts who see beyond the narrow lens of, just their own discipline and who really understand the bigger picture and how their work can impact businesses, their trajectory, and the lives that are affected by the businesses. Today's guest is someone who embodies that completely. Yuko Tsuchida is the founder and CEO of Hito LLC, a strategic tax consulting firm that helps businesses unlock value through tax credits and incentives. Over the course of her career, Yuko has helped companies claim more than $150 million in credits. This is money that, in many cases, those businesses didn't even realize was available to them. What I especially appreciate about Yuko is her perspective. She doesn't just approach tax as a compliance exercise. She approaches it as a strategy. She sees tax as a way to create cash flow. I've never heard of that perspective before, to fuel growth and to expand what's possible for her clients. And that shift in thinking is exactly what today's conversation is about. Yuko also has a gift for taking really complex ideas and making it understandable, practical, and immediately useful. So today, she's going to help us zoom out and see the bigger picture on why tax credits matter more than ever, how they actually translate into real money for businesses, especially in these times where cash flow is tight, and what we should be paying attention to right now. Yuko, I am so grateful that you are here. Thank you for sharing your expertise with us. And with that, before we start, I just wanted to do a quick poll so that we can get an understanding of who is here. Just wanted to know, are you an advisor? Are you a business owner? Or are you both an advisor who owns their own business? So if you can vote, give us a little insight into who you are. Okay, let me, let's see if it's launching. Did it launch? Okay,
Yeah, I did, Andrea.
awesome. Okay, so we have an advisor, and we have 50% advisors and 50% both advisor business owner. Okay, thank you for sharing that. And with that, welcome, Yuko.
Awesome. Thank you, Andrea, for having me and let me share like my passion, how to save tax credits and incentives. One of the reasons I'm like super passionate about like, tax credit incentive is like, it's not just a minimization of taxes, but like, these tools are available for businesses so that you can create job in America or like, retain them, right? And we see through like our work and through our clients, like, what we do is actually changing the life of like, people in community. So that's why I am super passionate about like, tax credit, tax incentives. So before I go into the today's topic, I just wanted to like, set the stage, like, what's my goal and like what's the intention. So my goal today is to provide business owners how tax credits and incentive can reduce your tax burden and improve cash flow, and how to pursue them in a way that it's defensible and aligned with like your company's strategy. And before I begin, I have to go over like, two quick expectation. So this is educational only, and it is not legal or tax advice for your specific situation. If you have a specific situation, please reach out to me or your advisors. And the goal is to help you like leave with a clear checklist what you might qualify for, what documentation matters, and what question you may ask your CPA or specialist to, understand tax credit, tax incentives. Let's go to next. So let's begin and talk about tax credits and incentives. And whenever I say tax credits and incentives, I'm talking about things that tax code or tax law intentionally use to encourage behavior, such as hiring, investment, innovation, energy upgrades, expansion. So I want to start with the big picture, why these matter and why they are often missed. Next. So I always get questioned why tax credits are missed? Why are CPA not talking to me about this? So I will go over few of reason. So none of which is involving incompetency of your team nor your CPAs. So just backing up a little bit, your CPA's primary job is to accurate compliance filing. And credits require additional fact gathering and documentation that often isn't standard tax process. And oftentimes credits and incentive, I will note this, we are looking for as well. And CPA's compliance often look back, right? Second is business owner don't know what qualifies. So they don't even mention or ask, and they may not know how to ask that question. And internal team don't track project in a tax-friendly manner so that you might not be able to know what's available that for you guys. Next. And most business owners, a lot of my friends too, right, think about tax once a year when you're filing taxes. And that's totally normal. But credits and incentive don't behave that way. They're more like strategy you build year round and then 3 to 5 year in advance. So here is simple distinction I want to make very clear on. So tax deduction reduces taxable income. Tax credits reduce tax liability dollar for dollar. So it's a reduction to your taxes. So credits tend to be much more powerful than deduction. In addition, credit could come in cash grants, abatement, exemption, tax financing, or it could be refundable or non-refundable credits. So even you're not profitable, you could take advantage of some of these tax credits. Also, worth mentioning is a lot of project or program allow look back study. So if you're looking at for example, research and development credits, we could look back for majority of federal and majority of states for 3 years. Next. So before I go into specific topic, I wanted to give you framework you can remember. So credit usually show up when your business is doing one of four things. First one is building or improving something, including products, process, or software. So essentially if you're innovating in a company, that might qualify. Second one is investing in the alternative energy or energy efficiency. And then third one is hiring or training people. And then last but not least, investing in equipment, machinery, and facility. So tax credits and incentive are not loophole. I hear this all the time, but tax credits and incentive are more like policy tools for government. So they're trying to attract certain activity or reward certain activity and reward that to businesses. Let's go to the next slide. And I want to ask, we're going to go into the R&D tax credit, but I wanted to ask, like, have you guys ever heard about R&D tax credits? And, and I think Andrea gonna like create the poll.
Yes. Sorry, I am a little having technical difficulties with the
Okay.
poll right now. Let me
So
maybe.
while she's doing that, I will go into the topics. So I want to spend like, a lot of time in R&D tax credits and like, because it's one of the biggest and most misunderstood credits. And there's a study saying less than 10% of qualified business are taking advantage of R&D credits. So I just want to like, uncover like, what is R&D in Iowa IRS and like how to claim that. So I think one of like, problem people or in the market everybody has is like whenever people hear about R&D, they're thinking about labs or patents or scientists. But the tax definition is much broader than that. The credit is really about technical problem solving when the outcome is not certain at the start. So it can apply to software development improvement, manufacturing process improvement, engineering design iteration, innovation, integration, automation, engineering design, reliability improvement. So there's a lot of like activity that may cover under R&D. Next, please. So as I said, like the Congress kept this definition much broader than like, a lot of people thinks. So it's essentially the Congress said any companies creating or improving product or process using hard science that may qualify. However, anybody who takes the R&D tax credit, they must prove that they can they fit into these standard like full per test framework. So I'll go through like one by one. So the first one, essentially what they're saying is if you're trying to improve or creating something, something like performance, reliability, quality, functionality, that may qualify. And second test is technical in nature. So any research and development activity, you take advantage of R&D tax credit that must be rely on engineering, computer science, biology, chemistry, something hard science. And then third test and fourth test goes hand in hand. So at the start, at the start of the project, you don't know the best method or whether it will work. So the last test is saying that you are testing, iterating, modeling, prototyping, comparing alternative, troubleshooting to like overcome that uncertainty. So if your team is like doing this kind of work, you may have already qualified for R&D tax credits. Okay, let's go to next. So that was a lot of like technical jargon and what we always go through with our clients. So I wanted to give you some of the example we see day to day. So we put up four different industry and there's much more. So if you guys are interested in specific to your industry, please reach out to me. So software or SaaS industry, a lot of things we see is building new feature with uncertain performance, re-architecturing for scale and reliability, and security improvements, integration where constraint creates uncertainty. Those are the big things we typically see. Manufacturing industry, we see something like improving yield or reducing defects. And designing tooling is big one too. Automation to hit new tolerance, changing materials and testing outcomes, developing new product method. production method. And then engineering and construction, which is like, interesting industry to see R&D. But what we see is like, designing like unique system under constraint, new method to like meet performance requirement, iteration when code standards and reality like conflicts. And then last one is biotech. If you think about biotech, like majority of like their performance might or activity might qualify, but what we see is like, often is product development, clinical trial, iterative design. So those were like, big things like, we typically see in each industry. Okay, next please. Okay, so I wanted to touch on like, some of the misconception like I always hear. So failure doesn't disqualify you. Failure means that there was a true R&D, and IRS and like state government, they love hearing those like failure project because that proves that it is that research and development. Second one is patent.
So, Yuko, can
Patent,
I ask a quick question?
yeah, of course.
A clarifying question. So, you're saying that the misconception is that failures don't qualify,
Correct.
but the reality is that failures do qualify. Is that correct?
Correct.
Okay, got it. Thank
Yeah.
you.
And like, patent, right? A lot of people think like to claim like R&D tax credit, there must be a patent, but patent is not a requirement under IRS. Patent, like having the patent, always like, helpful, but it's not requirement. And a lot of time, like we get asked like, hey, is there like minimum spend to qualify for R&D? There's no minimum requirement spent by IRS. And then the last one is interesting one, right? If they don't have like, any documentation about research and development, do they qualify? I will say like, if you hire or work with like, specialty firm who is specializing in like research and development credit or any type of tax credit, they will help you retroactively like, create those documentation through interviews or timesheets or looking at like, come in like, look at your facility and so forth. So just because you don't have a documentation doesn't mean that you don't qualify. You might have to spend a lot of time recreating that. So for us, like, Hito, like when clients do not have those documentation, we work together to like, create better documentation flow in the future. So now let's talk about like, what doesn't qualify, right? So pure marketing research or customer survey, those doesn't qualify. That's not relying on like, soft science. Cosmetic UI changes with no technical uncertainty or routine data entry or content creation, those wouldn't qualify. So the goal for us is to like identify real technical like experimentation and exclude ordinary business activities. Okay, can we go back, Renee? One. So till now, like I spoke a lot about R&D tax credit, but I want to like zoom out to like, talk about much broader credit landscape. Both like federal and state level, there are so many tax credits, small to large. So I will like touch on like, some of it. So work opportunity tax credit is a like federal tax credit. If you're hiring right people, such as like veterans or like ex-felon, you might qualify for federal credit up to like $9,600 per qualified hire. And if you imagine like, America has been like spending a lot of money on like, going to like energy sustainability. So if you're upgrading like property or if you're investing in like alternative fuel, you may qualify for like federal and state tax credits. And state and local incentive, this is like much bigger topic we probably want to talk about. but each government has typically like tax credit for solar, hiring, training, investing in CapEx. So if you're thinking about like, expanding within the states, you're creating jobs, that might be worth like exploring early and before decisions are finalized. And I say like, before like decision are finalized, many states governments are moving towards what's called negotiate tax credits or pre-approval credits because the best interest is to like, retaining those jobs, they might be leaving the states or creating job that might be like, created elsewhere.
Yuko, can I ask a question here?
Yes.
Because, of course, the whole job area is one that I'm interested in. And so, what is like what kind of activities would qualify for tax credit in the job creation space versus just getting deductions on income from the salary that you or pay that you give to your employees? What are the
Yes.
activities that will qualify for tax credit?
Yes. So two big category. One is creating or retaining jobs, right? So let's think about like, California, if you're creating job in a specific zone, like there's like, credit called new employee credits available. Let's say like, if a company is like looking forward and like, you are adding like 20, 30 job, you could go negotiate tax credit with like, California.
Ah,
Other part of it is that is like, many state incentivize companies like, training their employees. So California has like a fantastic training grants or like reimbursement program. If you are training like your employees, like, they will like reimburse training hours by like, certain amount. So those are like negotiated or like, pre-approval, like, program, but there are always like some like each state's a different and like, each like program is different, but typically like, they are looking at is company like, really promoting like people within and are they retaining, are they creating job?
wonderful. Thank you.
Of course. Okay. So sometime like, I get like question or like whenever we go through the exercise, like, they may say, hey, this credit doesn't really like, change my life, right? But if you think about just one credit as one credit, it might not be enough. But think about all the credits and incentives are available in the market, and then think about how you can like, utilize or combine those. And that's where we see like a lot of like, significant impact. So let's go to that next slide. Okay. Another question we often hear from like, businesses is like, if we claim the R&D tax credits or any tax credits, are there like, do we increase the audit risk? I will say no, typically not. Back in the days, like, if you claim R&D tax credit, it was like, automatic like, audit risk, right? But nowadays, like, IRS has cleaned that, like, bad player and bad businesses, like, who are claiming those. So like, I would say typical, like, audit risk is like, less than 2%. And like, whether you're going to claim R&D credits or any other credits, your audit risk is like, 2% or less. Okay, next. So I wanted to give you like, some of the question you can ask your advisor, like, CPA, or if you are seeking like advice from like, specialized firm, what kind of like, question you can ask to like, kind of like, evaluate them. So first one is like, what is your methodology, right? How are you gonna document and qualify like these project or like, employee growth? Second one is what is the deliverable look like? How do you gonna document technical analysis? Do you gonna will you give us like, IRS exam ready or state government exam ready like documentation? And then third is like, how do you calculate like, your fees, right? Is it contingent, success fee basis or fixed or like hourly? Like just making sure that like, you guys are aware of like, how they charge. If it's contingency fee basis or success fee basis, the audit representation should be included. So that's something I will note that. And lastly, are they going to like, defend in a IRS or state audit? And how they're gonna charge that. So like you are not like, surprised whenever it comes to audit. We get a lot of client because their previous like provider does not provide audit support and they disappear. So that's something like, you may want to like, really look at. Are they going to be here to support us? Because audit typically happen 2 or 3 years later than like, when you claim the credit. So making sure that you retain that relationship with specialists and like, making sure they will represent you whenever like, these are scrutinized. And one thing like I will notice, like the last one, is if somebody told you like everybody qualify or any like job you create gonna qualify, that's a red flag. Just making sure like you cautiously like select those specialists. Okay, let's go to next. So before I wrap up and like, take questions, like I wanted to summarize what typically triggers credits and incentives. So I have a list of this and like, please reach out to us, like, if you want to copy of like slide deck. But typically developing or improving product or process, creating new job is big one, investing in equipment, machinery, and facility and training employees, planning like a location or expansion, or merger and acquisition could be like, one of the trigger to, especially in the asset acquisition. And then if you're thinking about implementing like major organizational restructure, that might be something like, you might want to take a look and like making sure you're gonna qualify or not qualify. So when you're planning or engaging these activities, like, talk to specialists or like at least like your CPA to see if any credits or incentive opportunities are available so that you have, education and like, what to look for. Okay, let's go to next. So here is your homework. So the first is like, review what you're doing and see if you're conducting any activity that may qualify for credits and incentive. And this will include your strategic plan as well. Like, as I said, like, many states are moving towards pre-approval or negotiate credits. So if you're thinking about expanding or creating jobs, or if you're thinking about like, okay, I need to like buy these machineries or whatnot, you may have to like, you may be qualified for credits. Second, speak with like, your CPAs or specialists and like, get to know about like what potential credits are like, available so that you are aware in the future or now. And then third one is like, we always preach this to my team and my clients, coordinate amongst the professional. We cannot do our job unless internal finance team and like, executive team, uh, and also their tax CPA, like all of us are aligned because there is a taxability. What are their projection look like? So making sure like all the team are like, involved in these decision making. And then last one is like making informed like decision, like if you might qualify for credits. Okay. Lastly, I will just talk about what we do at Hito. So we are specialized tax credit firm and only focus on tax credit, tax incentives. And as I said, our focus is really helping clients and local community through what's available from federal and state government. So we are here to help businesses and any advisor who may see any activity like that. So, and last slide, if you want to connect with me, the QR code is for my LinkedIn. So please add me on your LinkedIn and DM me if you need to get hold of me. Thank you.
Wonderful. Thank you so much, Yuko. That was so educational. And I know I have a question, and I hope that, anybody else, if you want to put your questions in the chat or if you want to unmute yourself, feel free to ask your questions here. One of the questions for me is, as an advisor, what should I look for, or what are the triggers that will kind of help me help my clients go, hey, I think that you should look into whether, you should talk to Yuko, for example, about potential tax credits. It sounds like the manufacturing industry, or if they are in SaaS, those are kind of some of the industries. Do you have other triggers that can help me identify and point my clients in the right direction, or the things that they're doing?
Yeah, so I think a couple of things, right? If they're innovating, if you hear hey, we are creating software for our clients, or if we are innovating, we are improving product or processes, right? That might qualify as well. And on the job tax credit side, if they are thinking about adding more jobs within the states, that might qualify. Or if they're thinking about hey, we're gonna open regional headquarters somewhere else or branches, that might be something to look into. At least we can do benchmarking and tell them hey, if you're to pursue these credits, these are the tax credit you may be able to do. So we do 30 minutes complimentary discovery call. A lot of it is I get to know the clients and what they're doing, but within the 30 minutes we can tell a lot of credits that may be able to take advantage of.
Wonderful. Thank you. My other question is, Um, can you give us some concrete examples? I know you mentioned that general business activities, and it might overlap with your answer from the last question, that general business activities don't count, like, marketing or whatever. But things that are beyond that, types of innovation. So, for example, if a company is investing in AI to automate what they do, for example, or automate their marketing. Would that be something that could potentially count?
Could be. So Andrea is talking about R&D tax credits and I think it always go back to that full per test, right? So is there uncertainty? Is there rely on hard science? Is there onset of the project? Is there uncertainty and are you doing modeling, prototyping, iteration, right? So if you can fit into that, yes, that would qualify. So more and more I see AI automation, we get called for that. So what we always say is are you actually developing something using AI? Or are you just prompting AI to improve um, improve process, right? So here's a big distinction. If you're just using ChatGPT to improve your process or product, there's no uncertainty. You're not actually improving and yes, you're improving process. However, it's not relying on hard science. Um, let's say if you're actually implementing and using, creating internal use or customer facing software using AI, there might be like, opportunity for that.
Great, thank you. Looks like Rick has a question.
Oh yeah, I actually put it in chat. Hi guys.
Hey.
Hey. So actually I have two. So first off, based on what you just said, so if you're leveraging like ChatGPT or like another LLM to build a model of your own, does that still qualify? Um, or does the fact that I'm using another LLM kind of disqualify me?
No, just using LLM doesn't disqualify, but like we need to look at, okay, how much is that is technical uncertainty and like how much like modeling or like iteration you're doing, right?
Okay,
Does that arise to the point like it is qualifying like R&D activity, or is it more like, ordinary business, like, activities?
got it. Okay. And then, so on the people hiring front, if I'm hiring people, so I'm actually hiring people, but I'm paying them in deferred compensation. So I haven't paid them. They're like earning an hourly. Andrea's gonna like probably flip out that I just said that, um, but when we close funding, we're actually gonna make them whole, right? So we'll actually pay them at that point. When can I actually utilize that as a tax credit?
Yeah,
When
so
they earn it
R&D
or when
tax
they pay
credit
them?
is, yeah, research and development credit is computed based on the W-2
Okay,
wages. So if you're not paying today, it doesn't like they qualify, the activity itself qualifies, but there's no basis to calculate credits.
got it. Okay. So when they pay for the hamburger, that's when I get the R&D tax credit. Perfect. Thank you.
Thank you, Rick. Okay, does anybody else have questions for Yuko?
Yes, please. So actually to that point, because you mentioned when I pay for the hamburger, so cash basis versus accrual, is that ever a factor with R&D tax credits when those can be claimed?
So, cash versus like accrual, like we taking account, but like, it's based on like either W-2 income
Okay.
or supplies consumed during like, R&D or 1099 contractors fee. So we will be looking at, okay, what is the cash timing or like, what method you're filing tax return, and like, that will dictate when the credit is like, available.
Okay, so you calculate all that fun stuff.
Yeah.
Cool. I do have another question. You had mentioned these pre-negotiated credits with the states. I don't know if you've done a lot of research in California specifically, but because we're here, do you have any insight on what California is doing and what we can look to for our clients that may already be pre-negotiated for them?
Yeah, so California is probably one of the worst state to like for the tax credits, tax incentives. But there's a interesting program called California Competes Tax Credits. It is a competitive tax credits, and like there are incentivizing like people who are retaining or like coming into California more and more. So this was like this was replacement of the enterprise zone credits back in 2000, like 10 or 8, and then many people has claimed this, right? But more and more, like tax policy in California is like incentivizing those people who are actually thinking about leaving the state, or their expansion may happen in different states. So I had like, semiconductor company, like, recently, like, applied for the California competes credits, and they're still in that process, but their expansion could have like, happen in like, Arizona, close to TMC expansion is happening. So we have to actually look at like, what is like, why are they requesting those funds? And if they fit into like, what California is looking for, there is a definite like opportunity for like, negotiate tax credit in California as well.
Interesting. Okay, that's cool.
But Kristen, if your clients want to move out of California, there's much more tax credits.
Yes. They always do, but it's
Yeah.
the execution of that. So, okay, one more quick question, if you don't mind. On the CapEx or the fixed asset purchases, can you talk a little bit more about that tax credit? That's what I'm not as familiar with.
So California, there's not much. Like if they are manufacturing or like they're doing like R&D, there is a sales and use partial exemption for like capex like spending in California. But if you go to different state, let's talk about like Arizona, Tennessee, like those states. I think like there's like about 40 states they incentivize like capital expenditure investment. They typically look at like, there's a typically minimum, like a majority of state will say like, if you spend like 500,000 in next year, like they will give you like percentage of that. And some of the states, like bigger incentive states will like, combine the capex spend with the job creation. Those typically tend to be much bigger tax credits we see.
Interesting. Okay. That's cool. Cool. Thank you so much. I
Of
appreciate
course.
I was muted. Thank you for your questions, Kristen. I love it. This has been a wonderful conversation. Last call for questions. Going once, going twice. Okay, I guess we don't have any other questions. Yuko, that was so informative. I learned a lot, and I already have a list of clients that that I'm going to reach out to and send a copy of this video and make sure that they really think about this because I just hate to think that people can lose the opportunity of potential tax credits. So thank you so much for your expertise and for being here today.
Thank you. And thank you so much for everybody's time today.
Thank you. Thank you,
Thank you.
everyone. Okay, it's just us left now. Oh, let me stop.